Welcome back everyone to the Moneycontrol live stream. You're watching markets with Santo and CJ in association with M Stock by Mirae Asset. Well, it's been a flip-flop of a day, an extremely volatile session that has seen the market flip-flop between gains and losses and then losses again. If you look at the Nifty and Sensex index at this point of time, they're largely mixed or flat, not giving much away to either the bulls or the bears, but it is the mid-cap and small cap where all the action is today. It's clear capitulation and mayhem in the small cap and mid cap indices. If you look at the Nifty mid-cap 100, down over 2.5%, the Nifty small cap 100 down over 3% at this point of time. This is in addition to Santo, the Friday selling, and you have been warning about it in the morning. You saw this coming, man. I have to give it to you.
Well, thanks, CJ.
Clearly, I mean, this has taken everybody by surprise. I mean, you look at the Nifty and Sensex, you think that this is a very boring day. I mean, there's nothing happening in this market. And then you look at, stocks beyond the top 100, 150, it's been just carnage.
Well, actually, now we're beginning to see signs of capitulation, especially in second line stocks. If you look at the big losers today, down by more than 12 to 15%. So that clearly shows that now panic is setting in. In the morning, we were discussing, we were saying that, actually capitulation is still not setting in probably, and that I think we seem to have spoken a little too early. I think now the bigger thing to worry is also margin calls, which will slowly set in, because remember, even if all the other margins are collected by the brokers on time, there is also the mark to market margin, which means that whenever the stock price falls,
right,
the traders will have to pony up additional funds or shares, and that in turn could lead
not
to
only traders, even promoters who have pledged their stake.
Yes,
their also ratios will be probably going haywire in terms of collateral. I mean, they themselves could be getting margin calls going ahead. Who knows?
Well, already, there's been reports of a lot of shady dealings, accommodation deals and all those things, as the market was rising, and now we could probably see an unwinding of all those.
Yeah, but Santo, don't you think probably, I just have a feeling, with the small cap index now down, 32% from its highs, the mid cap index down more than 24%. I just feel, I mean, this is the sort of correction that we probably saw during the COVID sell-off, right? And at that point of time, if you bottom fished into that sort of a market, you ended up making pretty returns in the next 12 months. So I just feel that probably smarter investors out there would be looking at this as an opportunity instead of, another sign that you should probably dump out everything that you have and probably wait for a better time in the future.
Well, this is just hindsight, but CJ, I think, if you were to look back at the COVID correction and the fall there was huge amount of uncertainty. You never knew which way the market was going to play, and after that, nothing went to script, Central banks pumping in money, the rapid recovery in commodity prices, the blocked supply chains, causing a steep rise in product prices. All those were, completely just a bolt out of the blue.
So what's going wrong in your opinion this time around? I mean, why mid caps and small caps taking it on the chin then compared to, say, the large caps who have probably been holding fort a little bit better than their smaller peers?
Well, one reason I could think of, CJ, is that right now it's mostly technical factors at play, but the technical factors are also coming into play because of more fundamental factors, which is that a slowdown or a compression in earnings, which is likely to be
we have only seen a PE compression yet, not earnings downgrade.
Yeah, and the other thing, CJ, what happens is when the market is rallying, you see a lot of mid cap, small cap stories. Now, one of the reasons is that promoters, who have not been showing whole money in the books of the company, those companies start reporting very rosy numbers because the promoters know that there is more money to be made through higher market capitalization than by siphoning funds from the company's balance sheet. But the moment market sentiment changes, they know that even if the numbers are good, you're not going to get a very high multiple, and that's when they stop showing the earnings again in the company's book. And then it's a kind of a vicious cycle, right? As soon as the market sees that the numbers are not, the company is not delivering on the numbers, then you see the sell-off intensifying. And the more the stock price falls, the promoters are convinced. I mean, a good number of them, usually they are seen in the mid-cap and small-cap segments. This has been a trend for quite some time now. So I think that is going to play out. Even if the numbers aren't all that bad, I think what we have seen in the past is also many promoters actually stop giving the true picture of their earnings.
Well, Santo, fascinating theories, I must say, and of course experience also talking there, but clearly there is a choice to make for investors. Do you wait and watch or do you get in and probably start buying, bottom fishing in this market? That said, individually a lot of stocks have been doing well. Of course, they've also been doing bad, mostly doing bad. But clearly there are some stocks that caught our attention, starting off with Santo.
Page Industries, now the company management, the promoters have said that they've further trimmed stake in the company. So that makes it CJ close to about a little over 2% over the last 4 quarters. Yeah, they were holding a little over 48% and now they are holding little
buy the bottom and sell the top, it seems.
Well, a little under 47%.
Yeah.
Now, CJ, the stock always was an expensive one. In terms of valuations, it's quite expensive. Now, that's necessarily not a bad thing. But when you hear about expensive valuation, poor market sentiment, and also promoters reducing their stake, then it's a cocktail for
disaster
very clearly. Now the 4th quarter numbers were a big surprise. It was a beat on
I mean, the
all
volume
counts.
was so great, margins were also quite healthy.
Exactly.
I mean, seems very weird that the promoter will choose to trim stake.
If things are looking so good, and even the guidance which is given for the next couple of years, 20 to 22% revenue growth, even that was, if everything is so good, then the question obviously is that why are promoters selling stake? Now seasoned market players will say that a promoter purchasing shares should be seen as a better indicator than a promoter selling shares.
The reason could be anything. I mean, he could have some family issues, some family exigencies, maybe a wedding coming up, who knows.
Exactly.
You definitely cannot always speculate why he's selling, but you can always speculate why he's buying, right?
Yeah.
There are always good reasons for buying.
So here I think it's a perfect storm right now. You got expensive valuation. According to Motilal Oswal, even if the company were to deliver on the guidance that the management has given, at 56 times, FY24 earnings, the valuation, the stock is definitely not cheap, and which is why probably you could see the stock coming under pressure.
But Santo, I feel that Page Industries has always demanded premium valuations from the market, especially given the growth it has given over the past 10 to 12 years. Yes, the past 3-4 years had been quite bad. You had the economic slowdown prior to COVID, and then you had COVID coming in and knocking the stuffing out of a lot of companies out there. So clearly, the past 3 to 4 years have been quite bad, but I just feel that investors should get a lot of confidence out of the Q4 numbers in particular. I mean, it was a earnings performance that was not expected at all. If you look at the volume growth, if you look at the margin performance, clearly, and even the guidance for that matter, clearly the company is seeing something out there that a lot of the analysts have not been able to see. And for me, if you look at what Phillips Capital had to say, they believe that even in the base case scenario, Page can easily compound its net profit by 24% annually over the next 2 to 3 years. So clearly the growth trajectory is there. I mean, you can speculate about what the promoter means by selling stake at this point of time, that if you just go by fundamentals and ultimately stock prices are slave to earnings, I think fundamentals still justify the premium valuation that the company is getting in the sector that it belongs to.
But the promoter selling stake immediately after a strong beat in the 4th quarter might also be interpreted as by the market as something like that.
I have to
best may be over.
Yeah, I have to admit this is a dicey one to probably think about. But clearly there are a lot of choices for investors to make at this point of time, whether they want to go by the short-term indication of promoter selling, or they want to go by the long-term indication of the strong earnings performance in Q4. One stock where, sentiment seems to be turning a little bit, although not so much today, but in general, is PB Fintech. Now, another new age technology company which has seen brokerage come out suggesting that probably now is the time to get into a stock like PolicyBazaar or PB Fintech. As you may know it, the stock is looking, you have to give it, the stock is looking attractive after 40% correction from its issue price. Listed at around 985, trading at around 560, 580 rupees at this point of time. So clearly, a lot of pain has been in the stock now, factored in the stock. Kotak Equities, institutional equities, they initiated coverage on the stock today with a buy rating and suggesting that the premium income that PolicyBazaar makes could grow at 39% annualized rate, over the next 4 to 5 years. Kotak also expects PB Fintech to break even in FY25 and turn cash positive, Santo, in FY26. So clearly, Kotak is quite optimistic given after the sort of price correction, they now believe that valuation have now become affordable given the growth trajectory that the company has to offer.
Well, CJ, just one point here. Now, for the last couple of weeks, we've been seeing good volumes in this stock, and the price has held steady in a very volatile market, which kind of seems to indicate that the worst may be behind in terms of stock price performance. It's already, the stock has halved, close to half from the time it listed in.
I mean, if you look at it from its highs, probably it's down even more. I mean, probably 50 to 60%.
Exactly. So the worst may be over in terms of price, but then also is the question of, when do you actually see an earnings turnaround? This is, remember, this is a market where already investors are becoming very finicky about what they want to buy. We are seeing severe P multiple contractions, and the companies with the best of track record are coming under pressure. So that being the case, why would investors, in this kind of a market, want to go for companies where there is limited earnings visibility?
Because the upside is amazing, Santo. I mean, can you believe it? If you can get PB Fintech at this point of time and the management executes on the expectations going ahead, I mean, the upside on the stock could clearly be anywhere north of 100% from here.
Probably, but also remember that investors, this is an atmosphere of fear right now. Investors are losing money. When you lose money, you don't think in that. You're not.
But don't you guys say this is that is the maximum, where the best time to buy is when there is maximum pain on the street?
Which is true, but there again you would tend to stick with companies which in the past have delivered. This is a bit risky, but I'm not saying it may not rise from here. Already some people seem to be putting in money there because we've seen some huge volumes there.
Yeah.
I think it was just a couple of days back or last week when you saw volumes of close to about 10 million shares on the NSE in a single trading session. So some volumes are happening there. But I think by and large, this still remains a very,
I can't convince you, it seems. I still can't convince this man over newish tech.
Yeah, maybe, if prices correct by another 50% from these.
What is there going to be left in the table if the prices were to fall another 50%?
That's where the phrase is, bull market no tops and bear market no bottoms. Yeah. So, you could see some really crazy prices. You saw some crazy prices till about a year back. Again, you could see crazy prices for the next.
The current price is crazy in my opinion.
But wait for another 6 months and only then will you know. Berger Paints is the next stock on our watch list now. In general, paint stocks have been having a rough time. Today has been an exception though, mainly due to crude prices coming off. So there's some relief as far as the raw material prices go. However, the outlook for the sector is a bit subdued at this point in time. Ever since Grasim Industries said that it's going to enter the segment in a big way. Now the bigger concern is for someone like Berger Paints, who is right now at the number 2 position, because Grasim made it very clear that it's at first it's aiming for the number 2 position. So which means that Berger Paints position is under threat at this point. Also, according to analysts tracking the stock, Berger Paints has been losing market share to Asian Paints for some time now. Also, the fourth quarter numbers missed most parameters. The stock has also underperformed for quite some time since then. So there's a temporary bounce back, but it looks like it's going to be very difficult to sustain given the overall negative mood.
Yeah, Santo, I mean, company, there is no second thought. The company is at probably the most risk of losing market share because of the new entrants, and the rising competition is going to overall bring the industry margins lower. But I also feel that at this point of time, if you're looking at it from a near-term point of view, clearly there are a lot of these stocks in the paint sector have been oversold, especially something like Berger Paints, and with probably margin relief coming in from the second quarter onwards. If we see crude oil prices going down further ahead and head towards the $100 or maybe $90 per barrel mark going ahead, maybe that sort of a margin boost in the September quarter or the December quarter could provide a good run up in the stock, given that at this point of time it seems that investors have factored in that probably margins are going to remain lower and for a longer period of time. So for me, I think there could be a good tactical opportunity in Berger Paints going ahead. But yeah, at this point of time, from a longer term fundamental perspective, things do look a little choppy for a company like Berger Paints. One stock where the conditions are looking quite green is Ashok Leyland. Clearly, it's been benefiting from a cyclical recovery in the commercial vehicle segment. If you look at the past 1 or 2 quarters, CV volumes are expected to rise in FY23. There are no doubts about it. You have seen that recovery also happen in the April and May month auto sales numbers that have come in so far. Now, I feel that the stock is a little underappreciated still. Yes, it has seen a decent bounce back since April, but I think there's still a lot of upside to left, because volumes are improving and investors are still a little doubtful about rural demand, about economic slowdown and whatnot, given the sort of buzz that we have in the macro economy. But overall, if you go by just the data and the sort of ground reports that brokerages are coming out for, they believe that CV is one space that probably seems like a sure shot at this point of time. Apart from that, the company in itself is trying to become less and less cyclical. They're trying to reduce the share of truck business in their overall revenue pie, Santo. And the truck business was the cyclical business, because trucking sales generally tend to rise and fall with economic well-being. So clearly they are trying to move away from truck and get into more longer earning cycle segments, such as you have defense, you have other segments as well, which are doing quite well. Overall, we know that the rising need for e-commerce sale or e-commerce deliveries is also pushing up CV sales higher. Apart from that, if you look at the electric vehicle space, now this is one space where Ashok Leyland is trying to go with a very robust capex plan. It's trying to consolidate its entire EV offering under the UK subsidiary Switch, which potentially, if it goes well, could ultimately become a candidate for a demerger later in the life cycle of the company, and could potentially unlock a lot of value for the investors of Ashok Leyland itself. So clearly a lot of positives happening, a lot of revamp and restructuring happening within Ashok Leyland, and it seems all of it is for the good at this point of time.
Well, we've been hearing about this, CV cycle recovery quite some time now. Now, with Ashok Leyland, the stock has been one of the underperformers, been a laggard in this space.
I mean, not just right now, for 3-4 years now.
So many years now, So I'm really not, convinced about this story. You saw a sharp run up between from the lows of March 20, when the stock price almost more than rose 4 times. But since then, it's just been stuck in a narrow range, and we've seen the fourth quarter numbers turning out to be better than expected, but at the overall full year numbers, the company is still yet to come out with.
But it was also affected by COVID, Santo. I mean, I think it will be a little harsh on the company to suggest that if you have gone through the second wave and the third wave in a financial year, to probably come out with earth-shattering numbers in a financial year
it's just
like
returning to profitability, and I'm thinking, what kind of valuations will the market give it, or to what extent does it have to grow its profit if it has to even command a very reasonable.
I think if they execute the plan to perfection, the market would be quite rewarding. We have seen this market, reward its winners like anything, just the way it breaks down the losers like anything. So clearly, that is why I feel that the re-rating potential in Ashok Leyland is still out there, because we have yet to see the evidence, right? So far it's just expectation. When the execution also meets that expectation, then clearly that roll snowballs and creates a much bigger monster. So I just feel that probably there's a lot to go for Ashok Leyland going ahead, especially given that we are coming from a base of a 4 to 5 year of underperformance in the counter.
Well, the last stock on our watch list today is Marico. Again, FMCG stocks have done fairly well over the last few trading sessions, as investors are now shifting to safer havens. Now, in favor of Marico, I would say that falling copra prices are a big advantage for the company, and it's managed to pass on. The company has already said that it would pass some of it on to its customers. Besides that, according to analysts tracking this company, Marico has been able to improve its market share for Parachute, and also despite higher ad spends, the company has been able to improve its operating margins, and we didn't see the kind of steep fall that was evident in many of the other FMCG companies. Besides that, Marico's foray into food business also seems to be playing out well, at least in the initial days. So this is clearly a company that could probably be a stock to watch out for in the FMCG space.
Santo, FMCG might be acting as a haven for investors, but I don't know if I want to include Marico in that group, because clearly this is one company that is very, very much high at risk from a possible delay in the recovery of rural demand going ahead. I talked about it in the morning as well, how Rabi crop yields have actually fallen 5 to 10%, in the previous cropping season, and that possibly could delay the recovery in rural demand. Yes, maybe the Kharif crop season is great and we could see a good recovery in the third or maybe around the festive period that we traditionally see. But for the next 1 or 2 quarters, seems like the outlook is a little, much more muddy and much more hazy for rural demand going ahead. So clearly that would be one point that I'll be skeptical on Marico. Lastly, you talk about copra prices coming down and possibly, giving a sequential boost to margins. But still on a year-on-year basis, margins are going to still look pretty bad, especially gross margins given the sort of elevated commodity prices we have at this point of time from a year-on-year perspective. So clearly those are two challenges for me that the company will probably find a little difficult to overcome over the next 2 to 3 quarters, and we will have to wait and watch and see how the June quarter numbers comes out. Maybe the company will surprise all of us, but at this point of time the chances look a little slim.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do let us know about your feedback in the comment section below.
And as always, do follow us on the social media links at the bottom of your screen, and stay tuned to moneycontrol.com and the Moneycontrol app for all your financial news. We'll catch you again live tomorrow 9 a.m. with all the great action.